Hello traders, and welcome to another weekly forecast video. Hopefully everybody had a great weekend, and here we go with another weekly market forecast starting with the dollar index. As we said last week, we expected to see this drop. Right now we are doing a corrective structure, and then still we are expecting another move to the downside first before anything else takes place. So we are still biased to the downside in the dollar index overall. For the dollar yen, we are expecting to finish with this corrective bounce anytime within the next 1 to 2 days or so. And then we are still expecting another move to the downside, ideally to make another new low before we can get a corrective bounce in this market. So we are still biased to the downside for one more move in the dollar yen. For the euro dollar, we have reached another Fibonacci extension area with a pullback right here. We expected to see this move last week, as you remember. So from these levels, as long as we are above this low over here, the market should still provide us with another move to the upside to break the 1.10 area and generate another target to the upside over here. So we will be biased to the upside only for the euro dollar in the short term for this week or so. For the pound dollar as well, we are expecting to see at least a bounce for the time being. And we are soon to accumulate over here after a break of this trend line, and then the market should move to the upside for at least to retest these highs over here over the next week or so as well, before anything else can take place. For the pound yen, we are also expecting a little bit more upside. It doesn't need to happen, but during this, within this area, we are looking for another move to the downside, ideally to make a new low, marginal new low. So this will be the bias for the next week or so before we can get anything else. A little bit more upside, and then a new low or retest of these lows, we can see it taking place next. For the EURUSD, we have got this move to the upside over here with a peak on the 5th of August due to the market over panic during that day especially. We tend to believe that this was a fake out move and that the market will resume to the downside from thereafter. We can get possibly a corrective bounce within the next few days, but then the market should still fail and turn to the downside overall in the EURUSD, and from this stage we are not looking for any buy setups at this moment. For gold, we are still on track to hit our new all-time highs, as we have said before, above the 2,500 area, and this is where we should be heading ideally over the next week or so. Over here we can accumulate a little bit more, and then we will turn up to the upside within the next few days to make these new all-time highs, and this will still be our bias for gold, only looking for more upside in this pair. Now for oil we are doing a corrective bounce after we made new lows below the lows of 4th of June. This is what we expected, to make a new low. And now we are basically doing a corrective pullback bounce. We can see something like this, and then another move to the upside is very likely to take place before anything else. In the bigger picture, as you know, oil is bearish for us, so we are not interested for any possible setup for the upside. We are still looking for bigger move to the downside in the weekly and monthly time frames. From the SPX S&P 500 cash index, we have got this 3-swing pullback into a Fibonacci extension area over here, and we are looking to see for at least a retest of these highs with a decent bounce before anything else takes place. So we are not looking for any trade setups at the moment for the SPX, because we can see this bounce to be continuing, and then we might see another reaction later on within the next 2 to 3 weeks. But for the time being, ideally the market should continue with another move to the upside in the next week or so before anything else takes place. And finishing off our weekly market forecast video with our two ETFs that we publish, the 3Qs and GDX. So for the 3Qs, similar to the SPX, we are expecting this bounce to continue for at least this area before we can possibly get another reaction later on. This will be the view for the time being. And lastly, for the GDX, we have made the double correction over here with a low 5th of August as well. So this one is still on track to make new highs above the 17th of July. So we are also biased for the gold miners ETF for the upside in the next week or so. So thank you guys for watching. This was a quick update this weekend. We were not able to upload the full detailed one like we usually do. We will do that in the next weekend as we restart our normal schedule. Minor issue this weekend, so we couldn't upload it properly yesterday. So thank you so much for watching another video. Don't forget to leave us a like and subscribe, and we will see you in the next video on the next weekend. Take care.